Yeah. Okay. Our time frame, yeah. So I'll just do a quick
Yeah.
recap. Yeah. So if you're not
Yeah. Of higher
saying
time frame logic.
yes, if you're not saying anything, just you can mute yourself so that it doesn't become noisy.
Yeah. Yeah. Sorry. Thank you.
All right. So I basically it's just a way of trading from like this particular concept. One of the things it does is that it helps you to be patient, you wait for your setup, and then you don't take too many trades, and you find the trades that you're going to get into are high probability setups, and then you are confident that from those levels you have very, very good win rate. Yeah. So I'm just going to do a a kind of a recap. Sorry, I'll be kind of slow because my mouth just packed, so I don't know. I've been trying since it's not working. So if you look at this chart where I've drawn some kind of this thing structural, marked out some structural stuff for you guys. And then the whole concept is basically hard from one higher time frame level to another higher time frame level. So that's what price does. And I've realized that over this period of time that I've done very intense study, I realized that one of the ways you can have price, one of the level or one of the time frames, higher time frames that you can have price do well is from the H1. Like trust me, anything that happens from the H1 is bound to like hold. If I don't sit on the H1, then I'm not interested in any of the things that are happening on the lower time frames. Like you can practically take trades from the H1. I mean, with this concept, it's very, very easy. And I'm trying as much as possible to see how I can simplify and make it trader relatable. You understand that now? So basically it's and if you look at my chart very well, you find me doing this EXT, and EXT means external liquidity, then transactional liquidity, and then internal liquidity. Like this is the basic concept, like very, very basic. You don't have to do much. All you have to do is anytime you come onto your chart, you hop on your chart, you just want to find out where what is the higher time frame saying? What kind of liquidity has been taken? Do you understand that? And trust me, you see all of these liquidity areas that are marked here, the transactional liquidity, the structural liquidity, sorry, the external liquidity and the internal liquidity. These are areas that you will surely have price react for. And any of this area that is violated, price tend to react, come back to those areas and give you a kind of reaction. So these are the things you trade. You basically trade reaction. You don't need, and these areas I'm giving you guys, you don't need an extra confirmation. Like you're waiting for an extra confirmation, like you're waiting for one MSU to happen, you're waiting for one how do I say? You're just waiting for a lot of things. You miss out of those trades. Like these are levels when price get into. You just confidently take your trade and then probably give it a 5 pips, a 6 pips stop. You are good to go. So let me just run you guys through how I see this stuff. Can I hope let me clean out, let me just clear my chart so that it becomes remove drawing. So basically when I come to my charts, I just want to find out what kind of liquidity has been taken. If price takes, let's say price takes an external liquidity, trust me, when price takes an external liquidity, it's a good way to hold, like it's a way to swing. That's a very good place. I swing from external liquidity grab. The moment price takes out external liquidity, you can trust that price is going to hold for a while, at those levels. So what are the external liquidities? External liquidities are always to your left hand side. Yeah. External liquidity is what you find around these areas. Yeah. These are external liquidities. All these areas are liquidity zones. All of these areas are liquidity zones. All of these areas are external liquidity. You understand that? So the moment price takes them out, I mean, technical move, fundamental move can decide to take like 2 or 3 of them. So I'm talking about pure technical trading. So anytime price takes out these levels, you are sure that you are going to get a kind of a reaction from this external liquidity. Sorry, my drawing is bad. I told you guys that my mouse packed up. So don't just bear with me because my drawing is very, very poor. Okay, I'm coming. So these are external liquidities, and you want price to come into them, take them, and then you have your reaction. Price take them, you have reactions. This was taken, of course, sponsored by a news event. So you don't know how much price want to take that before you give you a reaction. So this too was taken. You get your reactions from these levels. So this too was taken. You see that? You get your reaction from this level. So
Yeah. It's showing.
all right, so cool. If price takes out like an external liquidity to the left, because I told you guys external liquidity are always to the left hand side, so you find them to the left hand side. So if price takes out an external liquidity and price start to do something like this, let's assume price takes out an external liquidity here and price is about to buy. So if you start to see something like this on the 1H, something like this on the 1H, yeah, this is your basic structural, like your basic structure. So this is called transactional liquidity, this one, because the transactional liquidity is towards the upside because an external liquidity has been taken from the left. So this is meant to be taken, yeah. So if you have this this sell to buy on the H1, so for instance, if price takes this, a pullback must have to happen. I don't know why my network is stable. So a pullback must have to happen. So if price takes this, so let me tell you the truth, you can get reactions from this guys here. But one of the places you enjoy the reaction well enough is when you have a transactional liquidity being taken at a strong level, let's say the 4H supply. You understand that? That's when you find these guys, when price takes out this transactional liquidity, you find a massive reaction sometimes. Price takes out a transactional liquidity, you find massive reactions. So these are only stronger when price is seated on a higher time frame stuff. Let's say a 4-hour zone or a 1-hour zone. So when price comes to sweep, I remember BNB got in on this on the sell. You understand that? He got in on the sell on Friday. I saw the sell, but I just didn't want to take that. I was looking out for the buys because I knew that price was going to come for this high. So, but my entry was very, very. I got into it. So, and of course, these guys didn't want to stay long on this level. So that was taken, I mean, within a second, the buy happened. So cool. I'll show you guys what I mean by that. Let's do a breakdown of what I just said about transactional liquidity and external liquidity. Now, if you look at this chart pretty much, you find out that this was an external liquidity that was taken. I caught this buy here, right at the tip here, and I held this buy to this point. So when I got into this buy here, external liquidity has been taken already. So what do I look out for? I want to see the H1 giving me this. That's all I'm looking out for. H1 giving me a transactional liquidity, like what you call break of structure, if you like, a bullish break of structure, something like this. So I am confident to start looking for my buys from levels like this. I mean, very, very basic. There's nothing complex about what I'm saying. So the moment external liquidity was taken on this level, so you want to hop onto your 1H. I mean, this is the time frame that I use a lot. If you don't use your 1H, like in fact, this is like the lowest you should go when doing your analysis. I use the 1H a lot. So if you are 5 minutes, 15 minutes, trust me, you get into a lot of, trades that, although you know the direction, but you are just being stopped out every time. So on the 1H, what do I want to see? Where is the last sell transactional liquidity? So if you look at this chart very well, We have this transactional liquidity taken here. So let's draw this. We have this transactional liquidity taken here. We have this transactional liquidity taken here. Yeah, we also have this taken here. Sorry, my drawing is bad. My mouse packed. I don't know. So you see, transactional liquidity taken here. So where's the buy transactional liquidity? Is seated right here, correct? Are you guys with me? If you are not understanding anything, you can mute yourself so that we can talk. So the next transactional liquidity on the 1H for the buy is here. Because we've taken an external liquidity to the left-hand side, so we are looking out to now engage the buys to take out transactional liquidity to the upside. To the upside is as simple as ABC. Now, if price takes out this transactional liquidity, it is meant to react and continue selling. That's the idea. From one liquidity level taken to the left hand, external liquidity, to transactional liquidity. So we want to see price take out this transactional liquidity and drop. So it is when it fails to drop, just like it failed here to drop, because this was a news event. He bought it towards this upside and took out many other external liquidity. Remember, this is the last transactional liquidity. As soon as the last transactional liquidity is taken, what you find is external liquidity. So this is an external liquidity on the H1. This is an external liquidity on the H1. Get it now? This also is an external liquidity from the H1. This is an external liquidity. Please, do you understand what I'm saying? If you don't understand, just ask questions. Let's trash this. Do you understand what I'm saying? Is there anybody?
Yes, sir.
Okay. So this is the 1H. I mean, this should be only on 1H. This is the transactional liquidity. And I mean, when price comes for this liquidity here, it should sell. If it doesn't sell, what happens automatically is that you switch your bias. You now know that we are now fully bullish, at least on intraday. We are bullish to a 4H level or a daily level. That's what it is. Like, that's what this thing is. So what I'm looking for now, if you didn't catch this now, what price does is at external liquidity, price doesn't give you too many confirmation. Trust me, if you don't take it, you miss it. If you don't take it, you miss it. So if you didn't get in here, this was a good place to get in. I think BNB was on this trade. Yeah, it was on this trade. I got in somewhere around here. You get it now? But I was in this guy and I also was here because I knew that what we are looking out for now after external liquidity has been taken, we're looking for transactional liquidity to be taken. So at this point, if you were in this, after the sweep of this guy, this was a news event, of course, you would have waited to see what the news will give, not just entering at or setting your limits. If it's approaching news and you had your limits here, you just delete it immediately. So this was a news event that destroyed this transactional liquidity. So the moment this was destroyed and external liquidity was taken here, I am now bullish. So where is my bullish level? Where am I going to be buying from at this point? First of all, this was the last transactional liquidity that was taken. So it means that when price comes into this level, I'm going to look for buys. Because this immediately price takes out this, we are supposed to have a sell reaction which failed and now takes out an external liquidity. So the moment price is coming back to this liquidity level, the last transactional liquidity level that failed to continue buying. Then if price doesn't do this, this is the next liquidity level. Now, this brings me to my next liquidity that you guys should take note of. It is called internal liquidity. So if you were studying the chart that morning before the news, or this was during London, what happened, what you saw here was that price had this. Let me show you guys what price did. Price did this. We had this buy here, sell here on the 1H buy. Yeah, sell, then buy, price sold, takes out this liquidity, and then takes out another transactional, because every swing point, let's say, let me show you, let me tell you guys something. This will help you a lot. If you have something like this, especially on the H1, something like this, it is meant to react. price is meant, no matter how small, even if it's an internal structure on the 1H, you are supposed to have a reaction. If it takes out a liquidity, you're supposed to have a reaction. So, but if this is happening on the internal, this is what I call internal liquidity, because what price does is price use this to build a lot of strong levels for continuation. Price use this a lot. Sorry, I don't know. Price use this to build a lot of strong levels for continuation. You understand that? So always pay attention to this stuff. I'm just showing you now on the H1. If you find it on the H1, pay attention to it a lot. It will help you. So let me go back. Let me delete this stuff. All right.
Can you explain again what that internal liquidity is? It's not very clear to me.
All right. So internal liquidity basically is internal liquidity is the structure within an external liquidity grab and the transactional liquidity.
Okay. Thank you.
That's simple. So these two, after this transactional liquidity was taken, this is an internal liquidity. You see that now? Hello?
Hello, sir.
Yeah, I can hear
Yes. Right, I got you.
All right. So someone was saying,
Yeah. Hello, sir.
Yeah, I can hear you.
Yes. Please, what's the clear difference between external and
Internal.
transactional liquidity?
Okay, external liquidity are always to your left hand
External
side.
and transactional.
Okay, external and transactional. All right. So the external liquidity are always to your left hand side on the higher time frame. Now, transactional liquidity is the last break of structure. Do you understand? Like if price is trending towards the downside like this, you understand that now? So this was the last high that created the low. Yeah. So this is the transactional liquidity. If price comes to take it, it should give you a reaction, especially when price has taken out an external liquidity to the left-hand side like this. You understand?
Okay. Yes, sir.
Yeah, so that's it. So the moment this transactional liquidity was violated by the news and price refused to sell from here because it's supposed to take it out and sell immediately to continue the sell. You understand that now? That was the job. That's the job, to continue the sell. Because I told you guys what price does is from one higher time frame liquidity to another higher time frame liquidity. External liquidity has been taken. So what price is going to target is transactional liquidity. Now, the reason why I didn't sell this guy was because within this external liquidity and this transactional liquidity, there is no structure here on the H1. Do you understand? If there was structure on the H1, I would have looked for sell within this guy and continue selling. You get it now?
Is that so? You don't consider that a little structure just yeah? Is that no down?
This one, there is if it is not buy to sell, it's not structure.
Okay, so structure for you is that buy to sell or sell to buy?
Yes, it must be buy to sell or sell to buy within the 1H leg. It must be. Is a must. So the moment we had this taking external liquidity taking, so I knew that from this external liquidity point, price is going to target the last transactional liquidity level, which was this place, yeah. So if you have like a transactional liquidity taking and you see price taking out multiple external liquidity levels back, what you do is that you just hold on to the last transactional liquidity that was supposed to hold price for a sell. For instance, in this scenario now, so this was the sell area when price was supposed to take out and then drop. But what happened? It failed. So what you do is that you wait for price to come back to it. Now, pay attention to this, very, very, very important. The moment you try to buy from this level and price fails to buy and you have an internal liquidity, you can decide you can as well buy from here. Do you understand that? These are the only valid levels you should buy from. I'm just giving you an example. So you try buying from here and price decides to fail. When price fail, if you don't have, like, let's say an internal liquidity, just like we didn't have here, I'm not going to be buying again. I'm only going to wait for this transactional liquidity to be taken. If, for instance, we didn't have this structure here, and price, I try buying here, price failed. I will just wait for price to do this, then I'll buy.
What would be your reason for buying up there? I suppose that should be a double break. Since there's no double break there,
Here,
what confidence do you have to buy above there? Yes.
and that's what I'm saying. What I'm teaching you guys is liquidity levels. At liquidity levels, we don't need confirmation. We don't need any confirmation to get in. If price is going to react from liquidity levels, it will take off immediately. So let's even go to 5 minutes at this level. If you want to be sure, maybe you can take a 5 minutes weak rejection. Do you understand? A 5 minute weak rejection is okay. Or 5 minute candle close. Sometimes it just moves like something, I don't know. It just moves. Now, if you look at this level very well, if you look at this level very well, look at what happened. You see that? You see, price came back to it and bought. In fact, it bought during the news. You see that now? See how price came back during the news and he bought. If you had this buy with 5 pips, yes, you bought this with 5 pips. This is close to 5R. You are good to go. You understand that? Price come now. This is what happened. When price bought from here, price went for another external liquidity. Yeah, went for another external liquidity at something around here, and you see how price was selling from there. What confirmation do you need to sell from here, please? You understand that now? So as soon as let's even find the liquidity that was taken at that level. Let's look for that liquidity. I wish I had a mouse. It would have been very easy for me. I'm struggling right now.
I'm going to buy you a mouse. No worry. You're teaching us well.
Thank you so much. Okay. I'm coming, guys. I'm so sorry. This is taking long. Right. So now look at you look at that on the 1H. So look at this. This is so beautiful. Please, I beg you guys, mark out every H1 level you find. H1, H4. As soon as this guy was taken, you see that? And I guess this was not taken. Was this taken?
Yeah.
It was taken too. Let's see. This. Okay, it was taken slightly. Immediately I see that rejection candle. There's nothing stopping me from, because this is external liquidity taken, and I should get a reaction from it. You're not confident to risk a lot, because this is where my major risk come from. Trust me, external liquidity. So as soon as price reacted from here, came back to this transaction and it was buying, I know that what price, I tell you, every price that reacts from liquidity level, if it reacts from transactional, is targeting external. Do not trade until you see a liquidity grab. After the external is taken, it is coming for the transactional. Do not trade until you see the liquidity grab. Are you getting it now?
Right.
Now, as soon as price was selling from here, what happened? Let's go down to the 5 minutes. Let's go down to the 5 minutes. BNB are going to take the next one, please, because I don't think I have. You take the next one, maybe with your phone or something. You see that? As soon as price took out that
okay, no problem.
As soon as price took out that external liquidity, what happened? We have the sell back to this transactional liquidity. Price took it out. You see that?
Yeah.
So the moment transactional liquidity fails here, the moment this transactional, because this is not meant to break, it is not meant to break. As soon as it fails here, but I'm going to still engage this buy, although a little risk. The moment it fails here, I know this is a strong high now. Do you understand? Sorry, my drawing is bad. I'm very, very sorry. My drawing is bad. Let me just use this too.
Yeah.
So as soon as I consider this a strong high, you see that now? I consider it a strong high. So price is meant to react from this level and give us a sell. This is 9. Is it 9? 9. Okay, 8 is 8. All right, so cool. I consider this a strong high. But meanwhile, what happened is that price now is reacting from this transactional liquidity. And what's the target of this? If it's buying from here, what is it targeting? Transactional liquidity first, correct? Am I correct? Transactional liquidity first, and you are meant to have a reaction from transactional liquidity. If it fails, what happens? It's targeting an external liquidity. And if an external liquidity is being taken, it's coming back for the transactional liquidity. Just look at this beautiful guy. After this fail, what happened? You see that now?
I'm confused why you are calling this one below transactional liquidity, brother.
This one, this is a transactional.
Because you said transactional liquidity. No,
this is not
the one
transactional.
below. The one below.
This one. Please annotate if you
The one on the left below, just where you were.
This one here.
No, go to your left.
This one.
Yes.
Why is it transactional liquidity?
You are correct. The last one is on.
This one, yeah. Because this is the transactional liquidity that failed to give us a sell. I told you that it is the area that will continue the buy. Because this reaction, this guy is supposed to give us a sell reaction to continue selling price towards the downside. Correct? And it failed. The news took it out and took out an external liquidity from this area. Yeah, so this external liquidity sponsored this sell back to this guy that we engaged our buy for another external liquidity grab. Then as external liquidity was taken, now what is the work of every liquidity point is to take out another liquidity. So if price is coming from an external liquidity, it's targeting an internal liquidity. Correct? So this guy was taken and then he hunted this guy. So this is the only place you are meant to trade continuation. You don't have any business with anything internal here. Because this is your last liquidity area. This is your last liquidity area. So even now, excuse me, let me look for it. So the moment I buy from here, the next, what I'm targeting is this liquidity. This is my next target. This is the next liquidity point. Correct? This is now the transactional liquidity. So if price sweeps this guy, I'm supposed to get a sell from here. Correct? At least back to this low.
Yeah.
Don't mind my drawing. So because this is an external liquidity that was taken that sponsored this. So if price takes out liquidity from here, this is now the new transactional liquidity. Do you understand that? So if price takes it out, I'm supposed to have a sell to the downside to hunt this liquidity level below. But as soon as it failed to give me the sell that I'm looking for, I know that it's hunting a higher time frame liquidity, an external liquidity. Let's go to the higher time frame so that you see on the H1. I have a lot of things to say to you guys, but I'm struggling here. Trust me, I'm struggling.
No problem.
So when the moment price failed this thing, okay, price failed this guy. As soon as this guy was taken, that was what sponsored the sell. Correct? So we had this guy too. Yeah, this guy. This was an external liquidity price. I think I was in this sell that it failed. The moment the sell failed to sell from here, then remember this zone is a higher time frame zone. In fact, it's a daily zone. I can show you guys that on the higher time frame. Let's mark that zone out. So you guys should be very, very careful with daily zones. Like these daily zones are the places you get most of your big reactions. I mean your daily buy to sell and sell to buy. You see that? Daily zone, daily week. Like you have your daily buy to sell week, like something like this. See that now? Very, very powerful. You see something like this. So when price is when you see some price like seated in a place like this, you should be very, very careful because you have massive reactions from there. Even if it's a pullback, the pullback is going to be massive. You're going to be taking a lot of liquidity. Trust me. So and that was the reason why Sir Ferdinand, I told you, and I think you asked me about that cell. I think it was a news event or something. I told you that I was in the cell.
Right.
Yes. I told that I was in the cell. So let me show you guys what happened. Okay. Remember, we were supposed to sell from the transactional liquidity that failed, yeah? Correct? This guy here. Let me find that, please. Don't mind me, it's because of this stuff. I'm just struggling to. I'll send another link in 4 minutes. My friend is going to take over. So, okay, what's happening? All right, see, let me delete some of this stuff here. All right, so this is a transactional liquidity, correct?
Okay.
Transactional liquidity, and we'll have our
Thank you, man, for the clarification.
Yeah, and I'll have our external liquidity, the one I told you guys from the left, yeah. So it was an external liquidity that we sold this. Then we sold this during London, and it was refusing to sell. We sold it back to the transactional liquidity that refused to sell too. Yeah, this is the area, and we had this push up here. So the moment we saw that transactional liquidity was holding for a buy, I quickly looked for something on the higher time frame that I could sell from. This is like the daily open of what I showed you guys, the week, yeah. So as soon as price mitigated it, I got in on the sell here. I got in on the sell right here. Hello, can you guys hear me? Sorry, network is bad. Everything is just. Can you guys hear me? If you can hear me, please say you can hear me. Let me know.
I can hear you.
All right,
I hear you.
I'm sharing my screen now. So I'm going to send a link, another link to you guys. This call is going to end probably in a few seconds or something. So I sold this guy from here, I think with 3 pips, I guess. Then, but I didn't buy because I was expecting this guy to take out liquidity and come for this guy so that I can buy here. But we had a push one more time. Because we were in our daily zone, I sold again. After this rejection, I saw this, I sold again. And the target was this. Remember our internal liquidity. Let me show you guys on the higher time frame so that you guys are. It must be on the 1H. If it's not on the 1H, forget about it. Even if it gives you the reaction you're looking for, just know that trade was probably luck or something. You understand that? You see our internal liquidity here? Are you guys seeing it? That was where the buy happened. Are you guys seeing it? Because external liquidity taking, this one, taking, and transactional liquidity bought it to a daily zone. We sold it back and destroyed transactional liquidity, then came for internal liquidity. So if you took the buy here and you took your profit here, I mean, probably you try to buy again, it breaks. This is the next area for a buy.
Yeah.